Hey there, it's Ryan Skaggs for your Mortgage Minute. Thank you for tuning in. This is your update for the week of August 10th through August 14th. So before we get into the update, hit that subscribe button. Make sure you're up to date on all the videos that I'm putting out. Put out videos every single weekend. And then during the week, a few mortgage-related videos in terms of what's going on in the market. So make sure and click that subscribe button. Be a huge favor to me. Also, hit that like button and place comments below. So let me know what questions you have. Let me know what other videos that you're looking for subject-wise or explanations that I can provide. So let's get into your update. The 30-year fixed went up. So finally, after so many times in a row, I keep saying down, 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 we actually had a slight trend up. So 2.96 on the 30-year fixed. That's up from 2.88. That is the Freddie Mac survey. Check out the link below in the description. So the first time we've kind of seen a nice little uptick. And that is really due to some really solid consumer data. We saw consumer price index up. We saw jobless claims down. We just saw pretty much any piece of information over this past week was really good news for the economy. Thus, the equity market starts to pull up, and that usually pulls up interest rates with it. So I always make the joke as interest rates go up twice as fast as they actually come down. So typically when rates start to move up, they'll go up very fast and then they'll trickle back down, up very fast and trickle back down. So over these past 6 months, we've really seen a slow trickle down, and then we'll have some of these roller coaster ups where we'll go up again. So we'll see what the current trend is. But over this past week, really solid consumer data. We had really big news about refinances this week. The Fannie Mae and Freddie Mac place the adverse market refinance fee on all refinance loans being delivered to them. Now, it's their parent FHFA, their governing body that put this in place. I'm going to link to the video above so you can check it out. You'll get my opinion by going through the video with the link above. But yeah, that was very big news in the market because refinances are now either higher in rate or more expensive to deliver. So that is absolutely going to be felt by the consumer. If you've not pulled the trigger on a refinance, you need to do immediately. There's time constraints on this that you need to be aware of. So hit me up, call your lender, whatever it may be, but take advantage and do it now. So, and last but not least, I want you to keep your eyes out, and that's why I want you to click that subscribe button. I'm going to be doing a video on appraisals of just what are we seeing in today's market. You know, we're 5 months now kind of COVID. So at August 15th from May, you know, we're 5 months in. What have we seen prices doing? What have we seen the local market, Chicagoland and suburbs? What have we seen that? You know, what are prices doing? Obviously, there's high purchase demand. We all know that. We're all seeing that in the market. But I want to talk more about those appraisals, why some of the big banks are really struggling to come in at value or even on time. Now more than ever, having a solid, experienced lender and company behind you when you're going to go do your financing, refinance or purchase is so important. I mean, I've got so many calls in the past week from big banks declining loans. Where it just makes total sense, but because of their new overlays or their very conservative view, they're not able to do those loans. So now more than ever, you've got to be working with someone that has the agility and flexibility in terms of their product scope and be able to have the experience to be able to get the loan done within the contractual closing date. So thank you so much for tuning in. I'll get off my soapbox there. 2.96 in the 30-year fixed, up from 2.88 last week. I'll continue to keep informed. Thank you for watching the Mortgage Minute. And again, hit that subscribe, hit that like. Thanks so much. Be safe, be well, and we'll see each other again very soon.